right, folks. It's another one of those episodes or videos or teachings, whatever you want to say. It's 1:30 a.m. in the morning. I'm bored. I got nothing to do. I'm waiting on work because I'm so bored. Like I'm literally excited to go to work because I'm bored. Like that's literally it. And I'm so bored to where I just woke up, got out of my sleep, and said, you know what? Let's record something. Okay. Low resistance liquidity remastered. Okay, because I did teach this kind of sort of wrong previously, like a year and a half ago. But guess what? We're back. We refined it and we actually understand it now. Understood? Okay, understood. Now, for the people which I right now, as I'm talking, I'm gonna put like a little timestamp or a little text at the middle that says skip to this point if you want to just begin learning about low resistance liquidity runs or high resistance liquidity runs, or just low and high resistance conditions in general. But for the ones that think low resistance liquidity is an actual formation in price, you are wrong. Okay. I'm going to say it directly to your face. You are wrong. There is no such thing as low resistance liquidity on this chart here, on this thing right here. No such thing. There is no such thing as low resistance liquidity on the chart. It does not exist. Okay. You either find a highly probable swing that price is going to take out, or you don't find one. It's simple as that. There like there is dumbass. You know what? I'm not even gonna cuss. There is retards that will straight up say that. Let's see. What would be an example of them saying uh low resistance liquidity or some stupid crap like that? But what would they use? They would probably use something like this. Hold on. Let's go to the 15-minute. They would probably say some crap like, wait a minute, because I'm pretty sure you know exactly what I'm talking about. Those stupid ICT LARPs that don't know what they're talking about. Hold on. They would say like this is low resistance liquidity, in which they don't even know what that is. No. This is a perfect example right here. See all these highs here? They would see a bunch of highs together and call it low resistance liquidity. That is not a thing. I'm gonna drill you. You know my teaching style. I'm gonna drill this into your head so you can understand. Because when it comes to my teachings, I'm not just gonna teach you the concept. I'm gonna teach you the mindset and the logic and the true meaning and truth behind the concept. Okay? Might teach you the formation, but you will know the truth. There is no such thing. Okay, say it with me. There is no such thing. Ready? Say this with me. As low resistance liquidity. No such thing. Okay, is it in your head now? Low resistance liquidity conditions or liquidity runs, because it's kind of sort of the same thing. Price is going to run for liquidity in general during every kill zone. So it can either be low resistance liquidity run or low resistance conditions, in which the polar opposite of that would be high resistance liquidity runs or high resistance conditions. Simple as that. What does that look like? I'm going to show you in just a minute. But just to prove to you that there is no such thing as low resistance or high resistance liquidity, let me just show you. Okay. I was in here earlier before I even started this video just to make sure I wasn't retarded. You know, just to make sure that I'm not an idiot and I know my stuff because I learn only from ICT. I don't learn from anyone else. You guys know this. So I asked it, is low resistance liquidity an actual formation of liquidity or simply a condition of price running towards liquidity? And it says directly here, a low resistance liquidity run is identified less by one isolated pattern, basically saying it's not formed by formation, and more by the way price behaves. Okay, see that right there? More by the way price behaves. Now I ask that again just to confirm. So is it a condition, not an actual formation of liquidity, correct? Like the behavior of price action delivering towards liquidity? Correct. Low resistance liquidity is not, is primarily a market condition or a quality of price delivery, not a separate formation that creates liquidity. Understood? You got it? And if you want to see the four sources, look at that. Straight to ICT. I don't watch anything else. Got this all from here. Okay. So anything you see on TikTok, on Instagram, on YouTube, on quote unquote 300 member Discord servers with 600 boosts for some reason. If you see them doing that, they do not know ICT. Okay. I may only have 1,300 subscribers. Sure. But I'm not going to teach you anything wrong. Understood? Because when it comes to certain teachings, in which this is required for this teaching because there is so many people that say low resistance liquidity is a thing. Like I said earlier, they would sit there and mark this as low resistance liquidity and not even know that it's just all it is just a bunch of highs built up. Simple as that. It's just a bunch of buy side liquidity. There's no such thing as low resistance liquidity. What? No, there's no such thing. In which you want me to prove it to you? Hold on. We're gonna go to TikTok, right? We're gonna mute it. We're gonna go to TikTok, and I don't know who this person is. Get this person on my screen. We're going to go straight to we're gonna say low resistance liquidity. Okay, now watch this. Watch the amount of people that do this. Watch this. See, this is the perfect example of what I was talking about. This is not real. Go back. No, go back. Go back. That is not real. Need you to understand that. I don't know if I can pause the video or whatever this little slideshow thing is, but that is not real. Like, who the heck is market mover signals? This person does not know ICT. No, not really. Want to see it again? Hold on. Let's see if we can find something else. See? Look at that. Low resistance liquidity again. Who is teaching them this? I don't know. I do not know who is teaching them this, but they're saying those equal highs are, for some reason, low resistance liquidity. It's not a thing. It's absolutely hilarious. Like, we're gonna see so many of these examples. I just have to prove this to you, okay? I got to prove it to you. Look at that. They're saying more low resistance liquidity. What is this? It's just highs. Just a bunch of highs being built up. That's it. That's literally it. That's it. Simple. Like why? And then this guy's saying it too. Look at that. Look at the background. They're calling that low resistance liquidity. Are you seeing what I'm talking about? Are you seeing? Do you get the narrative I'm trying to paint toward you in that brain of yours? Okay, I just had to make sure. I might have spent 7 minutes yapping, but it was a good yap session. Okay, I always do this, and it's never for no reason. Okay, but now you understand that low resistance conditions or liquidity runs is not on the chart. It is not a formation. It is not a level of liquidity. It is instead the behavior and the quality of the price delivery within a kill zone. Simple as that. Or within a liquidity run. That's why it's called low resistance or high resistance liquidity runs. Okay, now that that's out the way, let's go to the Discord server, in which I, you know, gave a little spoiler just now. But let's go to the compendia. Then we're going to go all the way to low and high resistance liquidity. And if you want to read it, here it is right here. But remember, we have this Discord server for a reason. I don't have this here for no reason. So any concept that you want to learn is here in the compendium. All right. Now, in short, just to give you a definition of what true low resistance liquidity runs or conditions are, it's simply, like it said, the behavior and the quality of price delivery. Super simple. Now, you would go on TikTok, Instagram, YouTube, whatever platform you're looking at trading videos on, right? Or just trade recaps. And people would say delivery like this is high resistance. I've I'm being so serious. No, I know you're shocked too. But there's people out there that say they can't trade this price action. This right here, just this beautiful expansion, no retracement, 400-point delivery, straight to the highs, taking out all the highs. Beautiful delivery, right? There's people on there that trade inversion fair value gaps that would say, I missed this whole move. This day was unprofitable. It was high resistance liquidity runs. I'm like, what? I'm trying to put this in perspective for you to just to show you the difference between me, your young and 15-year-old charter member, between these ICT LARPs that know nothing about ICT. I'm trying not to be egotistical here, but I'm just literally trying to put it into perspective of who you're really learning from and what's the truth. Okay? So this, just looking at hindsight, right? If we don't drop down to the 1 minute, this looks like a beautiful liquidity run, right? Now I'm going to show you the difference between that. There's a big difference. We're going to go to Thursday's price action, in which I just did another back test on the highly advanced entry mechanisms, but we're going to look at this price action here. And we're going to look at, what is that, Wednesday's price action? Yeah, Wednesday's price action, okay? Now, I think the bias I had for Wednesday was for it to deliver higher, okay? In which, let me pull up the singularity definition because there is a couple, there is a couple, where is it at? Looking for low resistance liquidity. Where is it at? Low and high resistance. Yep, it's low. Okay, now I do have some characteristics in here, which would be right here. Okay, so characteristics of low resistance can be, of course, price taking heed and delivering with all confluences given, meaning actually not being a disobedient piece of crap and not being annoying. Delivering on time, meaning it's following up with time and price, right? Displacing, keyword displacing, and running liquidity at designated times, basically still delivering on time. Respecting supporting arrays. Of course, it's not going to respect every single array, but that's just another characteristic that you would see of low resistance liquidity runs, in which all low resistance means is just smooth price action, not annoying, is super easy to trade, and you get your money quick. That's basically low resistance, okay? In which high resistance is the complete opposite. Disrespecting opposing arrays. That's a confluence or characteristics of low resistance. Minimal retracements. See that? See the word minimal? Retracements, meaning there's not a lot of retracements. It's just going into the direction that it needs to go in. It might manipulate within the first 30 minutes, do whatever it has to do, consolidate in the first 30 minutes. But after it does that, it's ready to deliver, barely any retracements, and it's offering you that displacement and that beautiful delivery. That is low resistance. And then I also say, in short, appealing, satisfying, and easy characteristics showing the market isn't so resistant of the narrative at hand. Basically saying price does not want to be a gay piece of crap, and it actually wants to deliver. Simple as that, in which high resistance, which is the total opposite, you get the point. So let's look at the high resistance first. This is going to be a perfect example. Let's look at the high resistance, shall we? So we're going to log into my Tradeovate, and we're going to go to Market Replay. I might have to edit out those credentials or whatever. Yeah, accept cookies. Yeah, yeah. What day is that? That is the 12th of August, 2026. 12th of August, 2026. We're going to do 200 speed. Up, there we go, 150K. And let's start this up. Now I'm going to show you, this is high resistance conditions, okay? On this day, I expected price to go higher. Now, what we're going to be primarily looking at is we're going to be mainly looking at, let's see, wait, is this pulled in? It is pulled in. We're mainly going to be looking at how it's delivering, like the actual delivery of the candles, if it's offering displacement, if it's delivering at certain times, if it's respecting certain arrays, if it's delivering off of arrays, basically just looking at the behavior of price action. We all know when price action is doing BS. We all know. Okay, we've all experienced it. We've all blown our accounts in it. We know. But I'm just giving you a bit more of a direct way to categorize it or just really give you some direct characteristics to really be like, oh yeah, we're in low resistance, okay? Because there is some confluences to where like ICT would say something like every 15 minutes there should be a fair value gap, and if there isn't, you might be in low resistance. That's not really true. Not gonna lie to you, that's no, not really true. Don't really focus on that. So I'm gonna give you the direct behaviors and characteristics of this price action, so you know exactly exactly the difference between low resistance and high resistance, so you can be ready to trade it or not trade it. So here we go. Let's go ahead and start this replay, shall we? We got the 15-second over here, 1 minute right here, and we have the 15-minute over here, in which I might switch this over to the 5 minute. Okay, yeah, there's the 5 minute, in which I could pull this in a bit more. And this is the 1 minute here. So me personally, I was expecting longs here, N- not specifically at this price point, but I was just looking for longs in general on the day. So, and if you want to look on Trading View, oh wait, no, I have to like do this real quick. But if you want to look on Trading View, this is what that price action looked like. It looked just straight wicked. Okay, so this is yeah, this is what it looks like. Anyway, let's go back down here. You're probably like, oh, but look at that, JJ. It's delivering pretty well. Remember, I'm looking for longs on this day. Reason being, we had a potential Tuesday low of week. See that? You had Monday consolidate, Tuesday manipulate, and then we had that distribution here in which I was expecting Wednesday to start distributing, right? Because it only makes sense. But look what price action we start to have. Let's say, because mainly I'm looking for longs. Okay, so I'm thinking this is like some mini manipulation, just something small, right? So I don't know where I get my longs in or where I try to get my longs in at, but I think I get it somewhere around here. but you're going to see in just a second. Let's speed this up, shall we? Play it at 400% speed. I think I try to get a long in here at that immediate rebalance if it offers a displacement. No, yeah, no, it doesn't offer a displacement. I don't know where exactly I got my entries in, but I was trying to look for longs. In short, I'm looking for longs on this day because it only makes sense, right? Just like, why would we go lower? I mean, we might manipulate, but overall, I'm looking for longs because it only makes sense. In which I think I get them somewhere around here, or at least try to enter. We have that meter rebalance, and then I think I take longs like right around there. Yeah. Now watch this, okay? I'm in longs, and of course the price action might look beautiful because, oh, that was a crazy teleportation, but of course it might look beautiful because it's the first, what, 7 minutes of the market. So, of course, it's not going to look too bad. I'm looking for displacement past that high there, but just look how price treats me. Look what starts to happen. Look what starts to happen, right? If you wanted to go higher, we would be going higher beautifully, right? But guess what? Price just doesn't want to do it. I entered off of the displacement of an immediate rebalance. Okay, I offered off of the displacement, so obviously I should see more displacement. Are we getting that? No, we're getting some choppy, not really displacey price action. It's really not really going anywhere. You see that? And then it completely just destroys me. Okay, so this is what I mean by high resistance conditions. You have a narrative, a bias, an expectation. Well, not necessarily an expectation, but an anticipation of what price could do. What you anticipate on price. Of course, you can change your narrative whenever you see that price is actually, you know, disrespecting or breaking certain parameters of yours, whatever you set. But I'm still looking for longs here. I'm like, okay, why is nothing working? In which reminder, I'm still looking for longs all throughout this day. In which I might have taken this order block and immediate rebalance here. If it starts to move away from it, but it's barely moving. Okay, now we're in longs again. Watch this. Which, as you can see, I'm trying to find that displacement, but it's not giving it to me. See that? Look on the 1 minute. The 1 minute it just doesn't go anywhere. It's not going anywhere. We're like, oh, but you're in profit $40, $75 right now, JJ. Look at how price is moving. Are you seeing that? Look at how it's moving. It's not going anywhere. And then look at the 15-second. That's how you know it's bad when the 15-second looks like a barcode. Oh, but you're at 150, JJ. Look, it's going up. No, 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 no. This is high resistance. If you were right, okay, in which, of course, we're going to assume that you're right, according to your confluences and whatever you mark, you should be right, of course. You should be right. But since price wants to be disobedient and still, even when it disobeys your entries, it's still going against you with high resistance. Like, look at the way it went lower right there. You see how the way it went lower? It went lower very choppy-ish. I can't really describe it, but it just very rigid going down. And even still, it's going up now, right? In which I could look for a displacement past this high and possibly hedge. But look at how price is delivering. It's very, very wicky. And that's also another thing too. Whenever you see price is very, very wicky on the minute and 15-second, in which you can see all these wicks and just a whole bunch of places where price has been. When you see a whole bunch of has been and not really going towards anywhere or like really going places, but it's been places. I can't really describe it. But if you see that price has been a lot of places but isn't really going anywhere, that's what the wicks are showing you. The wicks are showing you that price has been a certain place and it's not really going anywhere. So when you see a lot of wicks, like just an abnormal amount of wicks, like look at this, look at this, look at the 15-second. It looks even worse on the 15-second. But when you just see an abnormal amount of wicks and it's just wicking everything and not really going anywhere, that's also another confluence of high resistance conditions. In which, look at that. I was actually in this long, by the way. I was in this long. I took that long there, that exact same long, and I was looking for the displacement past that high. It displaced, but guess what? After it displaced, it came right back down. Now let me pause it. That's the disobedient part I'm talking about. I'm going to go back here. We're going to go to the characteristics of high resistance. The characteristics of high resistance can be lack of displacement and volatility at needed times, meaning the lack of volatility at needed times, many and unnecessary retracements, which would be, well, let me go back to trading view. This here, just a whole bunch of unnecessary BS when it's the first 30 minutes. So obviously the first 30 minutes should be moving pretty smoothly because it's the first 30 minutes. Why would it not be moving smoothly when we have a valid bias in check with us? Like it just doesn't make any sense, does it? So going back here, many and unnecessary retracements. I know I chopped up that word unnecessary. I got to redo that. Impulsive in random movements, meaning it's just it'll do some random explosive movement without following up with it, and then it'll just be totally random and going against your narrative and not really confirming it or necessarily um going with it, and it's just random explosive movement. And that's basically that's exactly what we're getting here. Like look at this. See that just explodes randomly. Of course it displaces, but it doesn't follow up. It just explodes randomly, comes all the way back down. You get the point. So of course, one thing I will say is you can eyeball these conditions. You can eyeball it and be like, oh, what the world price isn't really going anywhere. But you will have to take one or two trades to really feel the price action for yourself. Okay. I've been in the game for 4 to 5 years and I still have to do that. I still have a problem with eyeballing the the price action. I mean, you can eyeball it. You can obviously see when price is high resistant, but when you are in there and trading when that market is live, it's kind of hard to tell or kind of hard to resist the market because you don't know if it's going to displace. So you have to give it that opportunity to give you a win or give you a loss because you don't know if it's high resistance or low resistance yet because it could be 950 and you might be like, ooh, this is a good setup, or ooh, I could take longs during this point, in which you don't know what the next 10 minutes could do because we don't have foresight. We can't time travel. We can't do any of that. So you're going to have to take one or two trades to really go in there and feel the price action and actually feel what it's like to lose the money and get torn up in this price action yourself. In which that is something I actually advise you do. Go ahead and test the market. Lose $300 and see how it feels. And actually be like, okay, yeah, this market is not going anywhere. And how you can really confirm it is what I do. If I have a clear narrative or a clear bias in mind and I do not see price even trying to deliver it even after 10 a.m., because 10 a.m. is the most important part of the day, because 10 a.m. is supposed to initiate the delivery. Okay. If the delivery hasn't been initiated within the first 30 minutes, that 10 a.m. is going to set it off and make the market go boom. If that 10 a.m. does not do it by 10:10, or even after 10:10, I'm not trading no more. Oop, I just hit my mic. You might have heard that. But if it does not start moving, displacing, or delivering my narrative after 10 o'clock, I'm done. That's my parameter when I say get out, or when I say, okay, now we're truly in high resistance. Like you're not delivering at 10 o'clock. That's my personal parameter, and not even personal. You can use that too, because that's just what the London close is supposed to do, what 10 o'clock is supposed to do. It's supposed to deliver regardless. So that's one thing you could see. But if you want to train yourself on eyeballing the price action and avoiding certain trades, that's what I'm teaching you this for. Because while I'm teaching you this, how to eyeball it and actually recognize the low probability price action or the low probability conditions, liquidity runs, and stuff like that, or basically high resistance liquidity runs, whatever you want to say, you can do that. Because while I'm teaching you this, I'm also teaching it to myself. I hope you know that. This YouTube channel isn't just to teach you, but it's also to help me. Because, like they say, the teacher only gets sharper, in which that is super true. Because honestly, I don't think I would have gotten here without this YouTube channel and without me teaching and being able to re-utter the stuff that I know. Okay. But if you want to eyeball it and potentially miss out on certain moves, but still avoid the risk of trading the low probability price action or the high resistance conditions, you can do that. So we're going to keep playing this forward. Okay. Enough yapping from me. But when you do see these type of conditions, reminder, I say I don't use break evens, in which I truly don't. I really don't. But when you do see these type of conditions, I advise you use a break even all the time. Don't even that whole rule about me saying I don't use break evens. Just throw it out of your head. You can do break even. Like right now, I would go break even, or no, I would probably be out break even. But on these type of conditions, the high resistance conditions like this, and it's just not going anywhere, just doing a whole bunch of BS. Of course, do break evens. I wouldn't even blame you on that. Okay, but if you clearly see low resistance conditions, hey, that no break even not condition, but that I can't even speak. Holy, what time is it? Yeah, that's probably why, because it's going on 2 a.m. I'm having a bit of brain fog and I'm talking too much, losing breath. But whenever you do see those low resistance conditions, you don't have to put a break even because it's low resistance and price is likely not going to come all the way back up there because it's displacing and offering you that good delivery. And you can clearly see how bad the price action is just by looking at it. Like Jesus Christ, it's horrible. So you just seen high resistance conditions or high resistance price action in front of your face. You watch me take two losses, of course, in which I forgot to put break evens on them, 765 and 365. You watch me lose. Amazing. I'm a LARP, I'm unprofitable, and I stank. Right, good to go. So we're going to go back out of replay and instead go over low resistance conditions. Ready to see this? This is low resistance conditions. The next day, watch this. So I'm going to take the same exact entries I did on the highly advanced mechanism one, but I'm just going to show you, okay? I'm just going to show you the difference. Now, clearly we can see that obviously the initial opening is manipulating lower, okay? So it's going to be a little wicky in the first 5 minutes, but that's just normal because, it's tweaking out. It's typical. It's normal. It's going to do that. So we're going to let it do its thing. We're going to let it manipulate lower, which let me switch this to the 15-minute. My bad. Actually, no, 30-minute. 30-minute here. There we go, in which we got a 30-minute immediate rebalance, which is super, super important here. Watch this. You're going to see why this is important because that next candle, in which, if you notice, this is the 9:30 candle, okay? In which the next candle is 10 o'clock. So if that's 10 o'clock, right? If that next candle is 10 o'clock, that means this immediate rebalance should do what? Deliver higher because 10 a.m. is within what? New York a.m., in which during this New York a.m., we're looking for longs. Well, clearly we're looking for longs, right? Obviously. But anyway, going back to here, where's that entry that I took? It was the failure of an immediate rebalance. It was right about here. It was when I started seeing the displacement away. Hold on, let me get it. Oh, there it is right there. Once I seen that pop and that displacement higher, I longed. And then I had my stop right. It was either, yeah, it was right down here. So that was my, what's the word? What would you say this? Oh, yeah, sell stop, obviously, right? So just watch this beautiful price action. We're going to put this on 400 speed now, okay? In which I might just speed this up so you can see just how beautiful this price action really is. I'm going to maximize it, and we're going to let this play through, and I might just let this play until 950 up here. 950, okay? But just look at how easy, beautiful, and simple, and just not disobedient. Super simple, super easy, just a winning day, okay? Or in other words, if you want to see the characteristics again, price taking heed and delivering with all confluences given, delivering on time, displacing and running liquidity at designated times, respecting supported arrays, disrespecting opposing arrays, and minimal retracements. You're going to see all those characteristics come into play on this day. So just watch. Oh, wow, wow, look at that. Wow, beautiful, right? Minimal retracements, respecting arrays, beautiful, right? Beautiful, absolutely amazing. We're gonna let this run to 950, and yeah, you're just gonna get to see some of this beautiful price action. So I'm gonna go ahead and speed this up. It is going on 2 a.m. in which I should be asleep. Anyway, we'll be right back. All right, it's getting close to 950 as you can see up here. Do you see the price action? Beautiful, right? Big difference. Big difference. And then even this retracement right here, very, very minimal. Respecting this 1 minute fair value gap there. Beautiful. Beautiful. This is relieving to say the least. Very, very relieving price action. It's just easy, beautiful. Then you have this 1 minute meter rebalance right here in which that's going to get respected. See, look at that. Just so easy and beautiful, right? This I hate to say it, but sometimes this market can be a turn on, right? This kind of price action is just a complete turn on. But let's just be honest, right? And that's the big difference between high resistance and low resistance. That's the big difference. You're going to have a totally different feeling. In which, not saying you should trade emotionally, but you're gonna feel that the difference when trading those two conditions. All right, in which I have been recording for 33 minutes now, and let's see what time is going on. It's about to be 2 o'clock in the morning. I got work in approximately 10 hours. 10 hours from now at 12 or 11, 11:30, something like that. I got work. I'm bored. I'm excited for work. See my coworkers and have fun because without this trading stuff, I would be a chud playing Fortnite all day. But anyway, it's 2 a.m. I'm gotta go to bed, guys, and I'll see you guys on the next one. Good luck and good trading.